Buying a home is the single largest financial decision of your life. It's supposed to be the American dream, building equity, safety, and a future. But in 2025, that dream is navigating a minefield. The real estate market has shifted. Insurance companies are fleeing entire states. Laws regarding condo safety have been rewritten, and the definition of a safe investment has fundamentally changed. What if I told you that the house you're looking at right now could bankrupt you? Not because of the mortgage, but because of what's hiding in the walls, the ground, or the fine print. Today, we are exposing the 13 specific types of houses you must never buy. These aren't just ugly homes. These are financial death traps. We start with a crisis that is defining 2025, the climate uninsurable. In states like California, Florida, and Louisiana, major insurers like State Farm and Allstate have stopped writing new policies or are issuing non-renewal notices by the thousands. If you buy a home in a high-risk wildfire or hurricane zone today, you might find it impossible to insure. Without insurance, you cannot get a mortgage. Even if you find coverage, it might be through a state-run insurer of last resort, like Florida's Citizens or California's Fair Plan, which offer bare-bones coverage for astronomical premiums. Before you sign, call 3 independent insurance brokers. If they hesitate, walk away. You are not just buying a house. You are buying a liability that could become unsellable as climate data models update. Next is the flip special. In 2025, the flipping market is squeezed by high interest rates and material costs, leading to rampant corner cutting. These are homes bought cheap, patched up in weeks, and listed for a premium. They look stunning in photos. Gray laminate floors, quartz countertops, subway tile backsplashes. But look closer. Is the tile work sloppy? Are there gaps in the trim? These are the visible signs of the lipstick on a pig syndrome. If they cut corners on the finish, they definitely ignored the plumbing, electrical, and foundation. In 2025, savvy buyers are seeing new showers leaking behind walls within months. Never buy a flip without a sewer scope and an intrusive inspection. You're paying for a remodel that you'll likely have to redo yourself. Number 3 is the house with unpermitted additions. That finished basement or garage turned bedroom might add square footage, but if the city didn't approve it, it legally doesn't exist. In 2025, municipalities are using AI and aerial drones to spot discrepancies between tax records and reality. If you buy a home with unpermitted work, you inherit the violation. You could be forced to tear it down, or pay tens of thousands to bring it up to current code, which might require ripping open walls to expose wiring and plumbing. Worse, if a fire starts in an unpermitted room, your insurance company can deny the claim entirely. Do not accept the seller's assurance that it's been like that for years. Check the city records. If the permits aren't there, neither should you be. If you are looking at a condo, specifically in Florida or older coastal buildings, beware the assessment trap. Following the tragic Surfside collapse, new laws like Florida's HB 913 have kicked in fully by 2025. Condo associations can no longer waive reserve funding for structural integrity. This means buildings that deferred maintenance for decades are now hitting owners with massive special assessments, sometimes $50,000 or $100,000 per unit, due immediately to legally mandate fully funded reserves. A cheap listing price on an older condo is often a trap to lure you in before the six-figure bill arrives. Demand to see the current Structural Integrity Reserve Study, SIRS, and the last 6 months of board meeting minutes. If the reserves aren't fully funded, run. Solar panels are great, but leased solar panels are a real estate parasite. In Section 5, we discuss the leased solar nightmare. When you buy a house with leased panels, you aren't just buying the house. You are applying to take over a 20-year contract with a third-party company. These leases often have escalating payments that rise every year, and the equipment adds zero value to your home's appraisal because you don't own it. In 2025, transferring these leases has become a bureaucratic hell, often delaying or killing closings. Even worse, the lease places a lien on the property, UCC-1 filing, which can scare off mortgage lenders. Unless the seller agrees to buy out the lease completely at closing, this green feature will keep your finances in the red. The most expensive word in real estate is foundation. A house with structural issues is a wealth killer. In 2025, the average cost for minor foundation repairs is around $5,000, but major structural failures easily exceed $50,000 to $100,000, often not covered by insurance. Look for the telltale signs. Horizontal cracks in the basement walls. Vertical is usually settling. Horizontal is failure. Doors that ghost open or won't latch, and windows with cracks radiating from the corners. In drought-stricken areas or zones with expansive clay soil, the ground is literally moving beneath these homes. Don't let a fresh coat of paint fool you. If the bones are broken, the house is worthless. Always hire a structural engineer, not just a general inspector, if you see a single horizontal crack. Hidden in the walls of millions of homes built between 1978 and 1995 is a gray plastic pipe called polybutylene. In 2025, this is an automatic deal breaker. These pipes react with chlorine in public water, becoming brittle and bursting from the inside out without warning. Because of this known failure rate, almost every major insurance carrier has blacklisted polybutylene. If you buy a home with poly pipes, you will likely be denied coverage or forced to sign an exclusion waiver for water damage. The only fix is a whole house repipe, costing $10,000 to $25,000. If you see gray plastic pipes under the sinks or near the water heater, treat the house as if it has no plumbing at all. The price must drop by the cost of a full repipe. Buying in a flood zone has always been risky, but FEMA's Risk Rating 2.0 system has changed the math entirely. Flood insurance rates are no longer static. They are on a glide path to full actuarial risk. This means your premium can legally increase by 18% every single year until it reflects the true risk, which could mean going from $800 to $8,000 a year. In 2025, we're seeing premiums in places like Louisiana and Florida jump over 100% in a single renewal. Never rely on the current owner's flood bill. It is likely subsidized or grandfathered, a status you might not inherit. Check the FEMA flood map updates and calculate the full risk rate. If the water doesn't get you, the monthly premium will. Most people assume buying a house means owning the land it sits on. Enter the leasehold property. In this scenario, you own the structure, but you rent the land from a third party, often for terms of 50 to 99 years. As the lease term ticks down, the value of your home plummets. If the lease has less than 30 years remaining, banks won't give you a 30-year mortgage. When the lease expires, the landowner effectively takes your house. This is common in parts of Hawaii, Baltimore, and on native lands. In 2025, with land values skyrocketing, leaseholders are facing massive hikes in their ground rent when renewals come up. Don't be seduced by the lower purchase price. You are essentially a glorified long-term renter. Number 10 is the house directly under or adjacent to high-voltage transmission lines. While the debate about health effects and EMFs continues, the verdict from the real estate market is final. These homes are resale poison. Studies consistently show a property value decrease of 10% to 40% compared to similar homes just a few streets away. In 2025, with buyers becoming more health conscious and selective, that gap is widening. Beyond the stigma, there is the noise. A constant, low-frequency hum that can become torture for sensitive sleepers. You might get a deal when you buy it, but you will pay for it when you try to sell. It is a permanent defect that no amount of renovation can fix. If you love historic homes, beware the knob and tube wiring. Used until the 1940s, this system lacks a ground wire and uses cloth insulation that, by 2025, has turned to dust. Insurance companies hate it. It is a significant fire hazard, especially when buried under modern insulation, which causes it to overheat. Most carriers will flat out refuse to bind the policy until the wiring is 100% replaced. Rewiring a historic home is not just an electrical job, it's a demolition job. You have to open walls and ceilings, often destroying the very historic plaster you loved. Budget $15,000 to $30,000 for the rewire and the plaster repair. If the seller won't fix it, you shouldn't buy it. In our digital age, more people are buying homes sight unseen, relying on virtual tours and 3D walkthroughs. In 2025, this is a massive risk. Wide-angle lenses make tiny rooms look massive. Filters brighten dark dungeons, but technology can't transmit smells. It can't show you that the house smells like cat urine, mold, or stale smoke. Smells that can soak into the subfloor and require thousands to remediate. It can't capture the sound of the highway behind the fence, or the vibe of the neighbors. A virtual tour is a curated advertisement, not a home inspection. Never sign a contract without walking the property yourself or hiring a trusted third party who isn't motivated by commission to smell the air for you. Finally, the HOA Prison. Homeowners associations can be beneficial, but in 2025, some have become draconian. We aren't just talking about rules for grass height. We are talking about associations with the power to foreclose on your home for minor unpaid fines. We are talking about super liens and restrictions that ban you from renting out your property, parking your work truck in your own driveway, or installing EV chargers. Before you buy, read the covenants, conditions, and restrictions, CC&Rs, like a lawyer. Look for special assessments history and the association's financial health. Buying into a bad HOA is like buying a house with a landlord who lives next door and hates you. You own the mortgage, but they own your freedom. The perfect home doesn't exist, but the safe home does. The real estate market of 2025 is unforgiving to the uninformed. Whether it's an uninsurable flood risk, a condo facing six-figure assessments, or a flip hiding rot behind gray paint, the dangers are real and expensive. Your best defense is due diligence. Hire the structural engineer. Scope the sewer line. Read the HOA docs. And if you see any of these 13 red flags, don't be afraid to do the smartest thing a buyer can do. Walk away.